most out of your retirement? For all the years of your retirement? That's the primary goal of More Living with Jim Brogan and our Dollars and Cents segment, where we provide you with an important financial tip that will help positively impact the quality of your life in retirement. And now, here's Jim with this week's Dollars and Cents tip.
The Federal Reserve met this week to discuss the interest rate environment and inflation, and this has been my number one issue that I think we face economically. You never know if something's lurking under the surface that might pop its head out and be a real problem, but the how inflation is handled and how interest rates are handled, to me, is probably the number one thing, at least in my opinion. And they did announce this week no rate cut right now, no rate increase. And according to the notes, all of the policymakers pretty much agreed in their base scenarios they don't see rate increases. But, we started this year with the Fed saying with people saying maybe 6 or 7 rate cuts this year. And the rest of this year, they're saying, the Fed now saying 1, maybe 2. But it's really shrunk in the number of rate cuts. And the reason for that is inflation has continued to be persistent. Now, the numbers that came out this week, or have come out in the last couple of weeks, inflation has come down just a little bit. It's back in the low 3s. And according to Chairman Powell, there has been, quote, modest further progress, end quote, toward its 2% inflation objective. And so, they are seeing it start to come down a little bit, but the Fed has been very, very telegraphic in saying that they're not going to cut rates if employment is good, there's not high unemployment, if the economy's going well, companies are making money and seeing GDP growth. They're going to be reticent to cutting rates, as long as inflation's up there in the 3s. Now, interestingly enough, it's come up, why is the sentiment of everyday Americans so sour on the economy? And it's an interesting question, and I've talked about it a lot on this show. You look at the economic data, and it really is pretty decent. But Americans don't feel that way. And I think there are a couple of big reasons why. I think the number one reason is the inflation. It's if they say 3.2, 3.3% over the last 12 months, that's not a huge high number. Certainly higher than it was, for 15 years leading up to coming out of the pandemic. But it's on top of that 8.5%, 9% number we had not too long ago. So prices aren't coming down, and when we go to the grocery store, we feel it. You just can't get out of the grocery store anymore with much stuff for less than $100, I've found. There's a couple of other things. There's this perception versus reality. I think the media coming into a presidential election, they're always going to grandize that, they're going to always exaggerate things to try to get viewers, and it's kind of sensational reporting because they want to get eyeballs. But I think the number one thing is inflation and what it's costing you when you live your life, go to the grocery store, all those kinds of things. So now what does that mean for you? That means that we don't want to make short-term emotional decisions with how we handle our investments. With the Fed raising rates the way they did last year, you wouldn't think, typically if you look at a full economic cycle where they raise rates, they bring inflation down, unemployment starts to creep up, and then they start lowering rates again. The last part of that hadn't happened. The slowdown in the economy and increases in unemployment, it's up a little bit, but it hadn't really happened. So it's kind of shocking, to be honest with you. People have been predicting recession for a couple of years now. So I guess my takeaway is your investment plan, when you invest and take risk in things like stock funds and diversified portfolios, you're doing it for a point in time years from now. You're not doing it for next month or next quarter or even next year, because in the short term, the market is completely unpredictable. You want to be shooting for a target at least 5 or 6 years out, and that way you have time to run through some of these cycles.
That's our Dollars and Cents segment for this week. You can find this week's Dollars and Cents segment and others by visiting BroganFinancial.com.